Now, the JSE, or the Johannesburg Stock Exchange, it's JSE Ltd, Africa's largest exchange with the largest market cap and the deepest liquidity.
Yeah, so clearly this is not an asset manager, this is a market intermediary, but we did say earlier at the top we were going to talk about financial markets and asset managers. The JSE, of course, started out as a club of brokers, but it then corporatized itself and listed on the exchange itself 10 years ago, 2006, I remember it well.
And we're looking at a market cap here of 12.2 billion rand, price to earnings ratio of 13.8, dividend yield of 3.7%, and under the able leadership of Nikki Newton-King.
Tremendous job. We saw results from them a day or two ago. Just sparkling, you know, making money in equity derivatives, making money off new listings. That's what they call the primary market. That was like the listing of AB InBev and one or two others that I can't remember, like property funds.
Have we owned it? Do we own it, rather, should I ask?
You know, it always has felt slightly strange because as well as it's been run, it has a sort of a natural monopoly here in South Africa. It has done well.
Shouldn't you, as an investor, back the monopoly theme?
Yeah, you'd think so. You'd think so. And
they're going to do well.
They do. And of course, they incorporated SAFEX in the bond exchange as well. So anything to do with markets, trading and liquidity comes through the JSE. So they do a super job. I think they are, you know, pretty well regarded globally because of the quality of settlement we have here. We don't have failed trades. The computers hold up mostly. We haven't had a market shutdown.
Explain to me why we haven't been invested in the JSE Ltd.
Well, there are a couple of regulatory threats that are worth noting. So exchange controls, if those were ever to kind of come down or go away, then in theory companies could be listed anywhere and you wouldn't have this kind of closed
but that
walled
hasn't
garden.
been an immediate threat.
Exactly, it has not. It didn't even get a single mention in the recent budget. The other thing which is worth noting is that globally, stock exchanges haven't exactly been doing marvelously. I don't know why exactly, but you'll have noticed the New York Stock Exchange keeps merging with other organizations. The London Stock Exchange and the Deutsche Börse want to get together. And you know why it is? It's because institutions have found ways of electronically dealing with each other. The retail game has kind of become very chopped up. It's become a margin game. So it's not been a great industry globally, and that often means that an industry locally doesn't get the rating that perhaps its managers think it deserves.
Some positive moves of late. We've had the AB InBev listing. We see Brian Joffe and his team coming to market with the Bidvest Food Services division.
Yeah. So there's action. Let's look at the share chart, because it will be like the others. And it deserves to be higher. I'm surprised actually that it hasn't.
But again, it's going to be impacted by the underlying market environment. That's what you're seeing there.
Correct. Although the JSE, remember, benefits from periods of high volatility. It's the one financial services company which you could say is sort of market resistant a bit, because even when things get crazy and go down, then there's a lot of trading activity. Although the best markets for everybody in this environment are where you've got a rising market which just, you know, attracts more activity.
Hot or not, Paul, on JSE?
I'm going to call it hot because it's really got very solid fundamentals, and as you've said, the regulatory threats seem to be evaporating. So let's go with hot.